What's up, everybody? Welcome aboard to Bubba's Bottom Line, and a little late this week, but I was stuck in Las Vegas, and unfortunately we had the major tragedy. I actually was stuck in traffic about 1,000 feet from the hotel and where the shooting was going on, and I didn't know it. I'd have been pretty scared, but very unfortunate tragedy, and our thoughts and prayers go out to all those families and the victims, and just a wild, crazy thing, and hopefully we'll find out why. It makes absolutely no sense, but as we turn our attention to the markets, I think the first thing in reaction is that the markets had no reaction to this, and that just is another sign that nobody cares. And I don't mean that nobody cares that the shooting, but nobody has any concerns of what's going on in the outside world other than on Wall Street. And I think, again, this builds that complacency issue that we talk about often. And I think this is something that you have to understand, that eventually it has to change. Okay, eventually we have to have something that's going to mean something. And I think that's what the markets are searching for, is a reason to sell off. Now, when you look at markets in general, markets are supposed to sell off. Markets are not supposed to go straight up. In a true free market system, there are buyers and sellers, and we have times when people take profits, and there's times when we have disasters. But that's when you have too many weak hands trying to push markets higher, and then of course they become, they become slaughtered. And this is something that is part of the trading environment. Now, right now, we have an environment that is not necessarily what we would call a free market. It is very much controlled by the Federal Reserve and what they're looking to do and what they're looking for. I think you have to take this as it is and for what it is. We are now in an extremely dull period of trading that markets are waiting for something. And again, this, how do you know? How can I say that? Well, just look at the action in the market. There is none. Which clearly indicates that markets themselves are really kind of tired of going higher. But if you understand that markets are predisposed to go up because of money that is always flowing in, then you understand that right now we have a lack of sellers, and whether the sellers are waiting to get into later or they're waiting for a reason to really put the pedal to the metal, that we don't know. I think the important thing to recognize here is that it's a great time to sit on the sidelines and really observe the market. I don't believe you get a great benefit by getting in. Now, if you're just a regular investor, like I do with my IRA, my SEP and things like that, then yeah, then you just keep investing. You don't worry about it because you're going to go the turbulence, the good and the bad times. But of course, I'm going to hedge mine. But overall, you want to focus on what market action is bringing you. And to quote Jesse Livermore, saying that I made a lot of my money just sitting and watching and letting the other people churn themselves out. And I think that's something that bears understanding in here, okay? Notice how, we've talked about the market climbing the wall of worry. You hear the pundits talk about that all the time. And the markets keep ignoring everything that's bad about this economy and only focusing on what's good. Now, I think what you're seeing now is the slowdown in velocity, the slowdown in changes of the market. That's another indication. And of course, we talk about this. Complacency is the architecture of our downfall. And isn't that always the case in everything we do? In every walk of life, when you become too complacent, when you become too in a pattern, even from relationships to money, typically you end up with a problem. And I think this is no different. This time is no different. And I thought it was interesting. I was watching CNBC a couple of days ago, and one of the experts, I won't name who it was, but said that this time is different. And I had a chuckle, because we know that the markets are never different. This is not a new market. This is no different than tulip mania. They all have the same characteristics. We are building a massive amount of debt. And you know, I listen to some of the shows, and somebody keeps saying, well, we've added $5 trillion in stock market wealth. Well, the Fed spent $4.5 trillion to maybe create part of that. And at the end of the day, it's all air. It's all pocket. It's nothing, right? You don't have what we need. We don't have a true free functioning economy, right? We don't have a true free market and price discovery. And you've got people like Neil Kashkari, who is the Minnesota Fed president. I don't think he's a voting member yet, talking about, well, we shouldn't continue to raise rates. Well, what is the issue with raising rates? Okay, higher rates are better for everybody. The banks are certainly going to be happy with it. Not that I want to advocate helping the banks, because I think that I think the banking system, as we see it today, punishes and screws the small guy. Hell, they screw their own. They're like piranhas. They eat their own young. You know, the big banks don't want to see the little banks survive. But we'll talk more about that later. But at the end of the day, all right, the low interest environment did not help anybody but the very wealthy. The higher interest rate environment will help everybody. That's how you explain that why Prosper, Cabbage, and all these other peer-to-peer lenders have done so well, because the banks aren't helping them. So there's a big demand for money if it can be gotten. You know, if you're starting a business, you have to have money to do that. And I think that, again, becomes the problem that we ignore and that the Fed ignores, because the Fed is incompetent. The Fed is clueless. The Fed has absolutely no idea of what's going around them, because they are built on what happens in a book and the theory of what's supposed to happen. But we all know from real life experience that there is no playbook for real life. There is no playbook to tell you what to do when the unexpected happens. And you can bet, you know, we have a saying in the markets that the improbable happens once a week and the impossible happens once a month. There is no book that scripts that out. So for everybody who believes that this free lunch is going to continue, there ain't no free lunch, and nobody's going to be passing out $100 bills. All right? You better understand, and you better put yourself in a position now. And I'm not telling you to sell, and I'm not telling you to get short. All right? I'm telling you, you better keep your eye on it. As they say in baseball, keep your eye on the ball, because you're going to see something that you're not going to probably want to see here. And this market does not change anything. All right? This is a bubble like any other bubble. This has been built and maintained by the Fed at a cost of $4.5 trillion, all right? And it isn't over yet. And we become so dependent on the Fed that we forget about everything else. And you forget that if the Fed has their way, they will make this total society cashless, right? Because that will take away some of the issues that they have to answer for. This is becoming a major nightmare with every update that we have in the markets, because you continue to hear why we're going up. And we're going up, well, because earnings are good. Well, earnings aren't that good. All right, let's not kid each other. Earnings are not good if you're a worker. Earnings are great if you're the president or the CEO and you're getting a bonus. Earnings are phenomenal. But that is not the case to submit and to take care of the economy. Now, I'm an investor, and I love when the market goes up, because I'm always long anyways, okay, even though I want to be short term. But as a citizen and as a person in this country, it is not benefiting 99% of the people. This is the problem that we continue to ignore. And this is a problem that has to be rectified. And if we don't rectify it, every day that goes by that we do not see some reasons that things are starting to fall apart, every day we skip by this and every day we pass it means that the eventual breakdown will be all that much bigger. So when we continue to hide from factual information, when we continue to not admit or hide from the fact that we have created a bubble, when we look at valuations that are totally a joke and totally right there in par with 1929, then you will see a much steeper and a much more severe beatdown. Now, again, we don't know what is going to cause it yet, but certainly it could even be the tax cuts that do or do not come. I believe the markets have priced in the tax cut, all right? And even if they get them, the markets are going to sell off. If they don't get them, I think it'll sell off further. So I think the market, again, is searching for a reason to go lower. I think the markets want to go lower. I think it's healthier for the markets. But in the meantime, we can't fight it and tell it that it's got to go lower from here. What we have to do is we have to continue to trade the market or observe the market. My recommendation is that we observe the market and look on the sidelines, because I think you're better off waiting for opportunity. I don't see a lot of big opportunity. In the meantime, we're going to step out here for a break. This is Bubba's Bottom Line, Todd Bubba Horwitz. Make sure you get the Bubba Show every day at libertytalk.fm. We're going to step out here. We'll be back with more of Bubba's Bottom Line right after the break. Welcome back to Bubba's Bottom Line. And you know, there are so many things that are going on, and of course, again, I do want to pass out my condolences to those in Vegas and everybody who's affected. I mean, we're all, as Americans, we're all affected that something this ridiculous, the biggest massacre in history, can happen. But I think that we have to look, you know, as a financial entity, we're looking into what's going on in markets, and you know, these markets continue to make new highs every day. I think we're starting to see a lot of blow-off patterns. I think we're seeing a lot of things that are going to be unsustainable. You have a lot going on, but I think some of the other underlying stories here, Elizabeth Warren on the Hill, again, why they went back to re-grill Wells Fargo, I don't know. We know that they did it. There's not a question that they did it, and they're going to try to rectify it, all right? But Elizabeth Warren had this speech planned for probably months, and she tried to lay him away, but she's an idiot anyways. I mean, you know, here's a woman who made all of her money in banking, all right, and she's very wealthy, and yet she's clamoring down because now that she's got her money, she doesn't want anybody else to have their money. So I think this whole testimony crap, especially if you're going to round two, is ridiculous. We've got the problem with Equifax, and of course, why are we grilling them? They should be going to jail. They violated the human trust, all right? And if those guys did actually sell their stock and knew about it, now, of course, there's no way to know if they knew or not when they sold it. You know, there are, obviously, there's a lot of little quirky things that go on, and whether or not they knew or they didn't know, I don't know. I'm going to guess that they knew. I can't imagine they didn't, but, you know, Goldman Sachs had the same situation in the housing bubble. You know, one department was buying the bonds, and one was selling it, and they go, well, they didn't know. Well, okay, again, I don't know. I can't accuse them. Believe me, you know I'll accuse if I think that I can prove it. But if not, I will give you my opinion, and my opinion is very simple. All right, this whole thing is ridiculous. It's a joke. Okay, Wells Fargo is going to pay up like every other bank pays up when they screw up. All right, and they screw up all the time. But it's not that they don't pay when they necessarily screw up. They pay up when they get caught. All right, that's the key. When they get caught, they don't get caught often. But when they do, they pay up, and they try to pay up quietly and forget about it. All right. But now you've got, you know, a whole big mess going on. You've got the Federal Reserve floating out what we'll call a hawkish balloon. You know, they've been very hawkish the last couple of weeks. And of course, the bond futures have gotten clobbered, and interest rates have started to rise. But the markets are still going up. So they're in their cockeyed way, they believe that they can start to raise rates now because the markets did not have an adverse reaction to what's going on. But a lot of times when you kind of sneak around and you slunk around the world, all right, they're doing, I believe, as I said they would do. They're giving you a backdoor rate hike, which is selling their bonds, making the bond futures go lower, pushing up interest rates. So again, there's a lot of ways to do this, and most people don't understand the whole relationship anyways, so they're not grabbing onto what this is all about. I believe that the Fed is trying to manipulate this whole situation to put themselves in a spot to do things that they want to do. And from my perspective, I think that it's a problem. I think that we've destroyed and destructed the free market system. And we now have, you know, you remember a couple of weeks ago, Jamie Dimon came out and said Bitcoin was a bubble, it was crap, blah, blah, blah. And now you've got other people comparing Bitcoin to Tulip Mania. Well, in the meantime, all right, Goldman Sachs is getting involved in Bitcoin. Now, if they're getting involved, you can bet that it's quite all right to be involved. because they don't get involved in anything. They don't think that they can guarantee themselves to make money on it. But the thing about Bitcoin, and again, I was very skeptical about Bitcoin, and still am. I don't own it. Right? I watch it, but I become more favorable to the technology part of it. I become more favorable to the concept of it. And here's the point, and I got into an argument on Twitter with somebody about this, and that was simply this, right? Bitcoin is not a fiat currency. Bitcoin trades in the open free market 7 days a week, 24 hours a day, and nobody manipulates the price unless they're willing to put up their own money to do so. You know, if you want to put up enough money and you want to either sell enough or buy enough Bitcoin to force the price to move, you can certainly do that, but you can do that with any free market in any product, right? The fiat currency of paper money is a joke, okay? I mean, you can bet in a couple of days the ECB will be charping in here, but the argument was gold versus the Bitcoin, because I wrote for Kitco, is Bitcoin competitive to gold, and is some of the money that should be flowing into gold or that used to flow into gold flowing into Bitcoin? And I believe the answer is yes. And this was, well, Bitcoin's a fiat currency and gold is not. And I beg to differ. I would put gold as more of a fiat currency than I would put Bitcoin, because gold is directly tied to the US dollar, right? Gold should be. It isn't always, but that's the theory, the behind theory. Gold is tied to government, all right? You know, you might think it's not tied to government, but it's still tied to their policies. That's what makes it move. So if you think that it's not, well, again, and I wrote back, my final comment was, this was make a market. All right, you think one, I think the other, we don't have to agree, which is fine. You don't have to agree with me. I don't say that I'm always right. All right? I will tell you when I'm 100% right, and I will tell you when I'm expressing an opinion. I'm expressing an opinion here that I believe Bitcoin is a truer free market than gold right now. All right. Now again, I like gold. I think you should own gold and silver. I'm a big fan. But I also believe that gold, because of the word how it stands, is still somewhat manipulated. Right? And it's manipulated by the money and by the way that it's done. And also there's other issues with gold, like there's too much paper gold. So there's more in gold right now. And again, I can't say one way or the other on the cryptocurrencies yet, because I don't know. But I do know the way the markets flow. I do know the way the markets function. And their market is a free market. The other markets are not. And that is something that I think is very important to understand. So I think that's something that we look at. I think if you look at the big picture and you continue to hear these guys, you know, again with this inflation, ask the farmers about inflation, all right? Look at the grain markets. They're getting hammered, all right? They're still way down, all right? Look at the agricultural markets, the beef. I mean, yeah, hogs have rallied recently, but cattle is still weak. Excuse me. Soybeans, weak. Corn, weak. Okay, this is not what we want. This is not what we're trying to get to. And I think this, again, becomes the overall bigger problem. Right? This is what all of this manipulation has done, is kept a lid or a top on these things, which also goes back to gold. Right? Why did the dollar sell off dramatically and gold not rally as dramatically? That's, again, issues, logic. I think about it. I don't understand why certain things happen. But what I do understand is that we've got a massive amount of debt. What I do understand is that we continue to kick the can down the road and nobody cares. What I do understand is that the political system is broken and they're all full of crap. What I do understand is that this market is dying for a reason to sell off. And what I do understand is that we have people that would rather cheerlead the market for their own precious reasons. Brokers want to do it because they want you to be in there buying so they can make their commission. Advisors need your money in the market so they get paid. TV networks want the markets to go higher because it brings in ratings. I'm just saying to you, and I'm just saying, all right, markets are markets. They're not different. There's going to be a sell-off at some point, and I'm not telling you not to buy. I'm not telling you to sell. I'm saying, hey, be alert, be aware, think about it. All right, that's what I'm telling you about. I'm not telling you to do anything with your portfolio, but we have had an extended run with the ratios and with EBITDA comparable to 1929. Now, mind you, do I have to remind you what happened in 1929? Do I have to remind you what happened in 1987 or 2001 or 2007? And I'm sure the answer is no, I don't have to remind you. So what I'm saying to you is that there's times you take a look to be careful, and there's times you get more aggressive. And this would be a time you would want to be a little bit more careful, a little bit more concerned about what might be happening next. Markets at record highs, ignoring every piece of bad data. And this is typical of markets going up. You know, again, when they start to go down, then they will ignore good data. This is not anything new, right? In the meantime, this is Bubba's Bottom Line. Todd, Bubba Horwitz. I'm going to stop out here for a break, and I'll be back with my opinion after the break. Bubba's Bottom Line. We'll be right back. Welcome back to Bubba's Bottom Line. Todd, Bubba Horwitz with you, and wouldn't you know it, I have an opinion about something amazing. Anyways, so I mentioned earlier banks. Now, I'm a big anti-bank guy. I think that the banks have too much power, too much control. I think the big banks are a joke. I think that they're more con artists than anything else. They help to continue to perpetrate this Ponzi scheme that the Fed is running because of their size. And I find it amazing that they're willing to put out community banks out of business. And if you remember, go back to the savings and loan crisis, these banks, community bank savings and loans, these are the ones that the average guy needs, okay? You're a farmer out in Iowa, you're a farmer out in Kansas, or wherever you are, all right? You need a local bank that can cut you some slack, okay? You need somebody there that you can talk to, not somebody who's got to go through 42 chains of survival to maybe give you a buck, all right? This is the problem. The way the regulatory bodies handle this, they handle I'm going to give you a number, not correct, but let's say the big banks are 20 billion and the small banks 1 billion, all right? Let's just say they're 20 to 1 in size, all right, just for the example. They both pay the same fees. So the 1 billion bank, the small bank pays the same amount, so a much bigger percentage for compliance, for other things, which goes back to these onerous regulations that are out there. This is a problem, and this is really a penalty and penalizes the average guy in the street, especially in the farming community, because those guys borrow millions of dollars to feed you. Let's make it simple, right? You know, a farmer puts out a lot of money, a lot of sweat, a lot of blood to get that farm ready to go. They have no guarantee that they're gonna get that money back. They have no guarantee that they're gonna have a good year. But in the meantime, starting in March usually, they're out there planting. And starting in, already they're started to harvest already, and they're harvesting it, all right? Now they have no guarantee that they're gonna get that money back that they borrowed. Now again, there's some things that work well for farmers as well. I'm not having a tag day for them, but I am telling you that the banking system is truly detrimental to farmers. It's detrimental to small business. Why? Because the big banks want to take full control. So they want to put out the little guys, and I think this is something that needs to be regulated. You want to talk about a regulation. The regulation is to have everybody pay the same percentage in stuff that needs to be done for regulatory and compliance. To not penalize the smaller bank because the bigger bank wants them out of business. These lobbyists and these big guys have too much power. That's really the bigger problem. The whole government setup gives them too much power. We need to cut that power down. We need to go back to allowing free markets, Steve, again, with free markets to work. We are not seeing a true free market system. If we were, we wouldn't have a Fed that was so ridiculous and so clueless. But when you look at the bankster gangsters, all right, and I'll use Wells Fargo because they're on trial today, all right, Wells Fargo, what's going to happen? So what? The guy's getting grilled. So Elizabeth Warren's beating the crap out of him. So what? At the end of the day, what is he going to do? He's going to pay his fine, pay their money, and go on. In the meantime, Warren Buffett gets involved, another guy. I mean, look, he's a smart guy, and I can't take away his intelligence. But why is he so concerned here? Because he's the biggest shareholder in Wells Fargo. That's why he's so concerned. You think if he wasn't the biggest shareholder, you think he would be so concerned? Look, it's great that these guys have made billions of dollars. I have no problem with Warren Buffett making billions. All the billionaires, I wish it was me. But we do know one thing, okay? Everybody speaks their book, all right? And Warren Buffett is no different. You can talk like he's the nicest guy in the world, but he is the same guy who inverted when he criticized everybody for inverting. He is the same guy who keeps saying we should pay hard taxes, but in the meantime, the way that he pays himself, the $13 million, $12.9 in dividends, which is taxed at a much lower at the $100,000 he pays in salary. So going back to the banks, this whole thing is just a big pile of, you know what I'm talking about, all right? And until we wake up and say, hey, let's go back to not all this branch banking, you realize that what we pay for, you know, JP Morgan Chase, which I bank there, but why? Because there's a branch. There's 10 branches within 5 miles of my house, right? So what do we need to have all that for, right? That's my issue. My issue is I'm paying for that, so are you. When are we going to wake up and say enough? That's what it comes down to, all right? We cannot continue to let these big monsters push everybody around, because I can give you 1,000 examples of that very issue. You can go right back to 07, 08, when Goldman Sachs took advantage of AIG. They're the only one who took advantage of it. I'm just saying, all right, that the way that the structure is right now, it cannot benefit Main Street. And you know what? I'm tired of taking care of Wall Street. I'm a Wall Streeter, right? But I'm tired of taking care of it. I want to see everybody have an equal and fair opportunity to succeed. I want everybody to have an equal and fair opportunity to get that money from bank when they want to borrow it. But right now, we don't have that. In the meantime, that'll do it for today. This is Bubba's Bottom Line, Todd Bubba Horwitz. Make sure you get the Bubba Show every day, 2 to 3 Eastern. Thanks for listening. Thanks for being here. And we will see you back here next time. Bubba's Bottom Line. Thanks, everybody. We'll see you.